Recording in progress.
Hello, Bay Area. Happy Sunday. I'm your host, Realtor Nagaraj Annaiah. Today I have two special guests, Tony and Elder from the CPA Dude. Being a tax year, being the end of the year, it's very important to talk about the tax and our new event happening on December 13th. Also, we'll talk about. Hello, Tony and Elder. Welcome to the show.
So Nagaraj, how we doing, man?
I'm doing good, Tony. How about Elder? Yeah, I think we have some connection issues with the elder, but let's talk with the Tony first. Hello, Tony. Being end of this year coming, right? Already it's a December end right now. If somebody
Oh,
is looking for tax planning, what's the first thing they need to be doing, Tony?
oh yeah, definitely a lot of things you got to be doing if you haven't done anything for the whole year. But the first part I always tell folks is that if you don't have any tax planning done, you got maybe 20 days left to really go about it. The best ones that you want to start thinking about is like, if you have businesses, retirement accounts, maxing those out, income shifting, paying your kids, the Augusta rule, renting out your home to your business. That's going to be really important to do right now. If you're W-2, the big thing that you have not done is if you don't know your estimated taxes and know how much you have to pay that in before January 15th. Otherwise, you're going to come in for a big surprise and it's going to not be too good. Some penalties and interest also. So making sure that you have that. The big part too is tax loss harvesting. So business, real estate investor, W-2, doesn't matter what you have. If you have capital gains, you want to think about doing some tax loss harvesting, which simply means, hey, sell some of your bad positions that can recognize a loss that will help offset your capital gains. One big thing that people get confused about is that it only offsets $3,000, but that's wrong. The main thing I want to clarify, folks, is that, hey, you can sell $10,000 of capital losses, and then you can use, say, you have $5,000 capital gains, use 5,000 of it up, and then you still have 5,000 left over. Then you can use 3,000 more to offset your W-2 income. So it's a good way to recognize some losses, get it out. Yes, I know you're losing money,
Yeah,
but hey, it's better than having it stuck there forever.
yeah, that's a good one. Hello, elder. Welcome to the show.
Nagaraj, thank you for having me.
Yeah. So we are talking about the year end being an year end already. What are the alternatives or the stack strategies we can start looking for? Right. The Tony started on to. Do you have anything to add on to it, Elder? I think we have some issues with the elder
Oh,
today. I
okay.
think, but with Tony, we can start look like basically. So one of the thing is look at the stocks options, right, or which is making good, which is not making good. Look for that portfolios. That's the one way.
Yep, tax loss harvest. Prune out the bad ones, get the money out so you can, do investments with that other money. Don't let it sit. A lot of people, what they do, they think, oh, I'll just wait for the stock to come back. And it's like 1 year passes, the stock did not come back. If it did come back, it went up 5%, but 5%, you just lost all your money to inflation. So, you need to put it in asset classes that are going to help you save like either taxes to help you a little bit, or it's going to grow at least, 8, 10% like the S&P 500 minimum. So really don't sit on your hands with this. A lot of people I see have very inefficient positions on their stock portfolio.
But what about this is for the tax? Basically, if somebody is holding on to a stock portfolio, okay. If somebody is holding on to real estate portfolios,
Yeah.
right, so what is the things they need to be looking? So somebody has given into a, let's say somebody has given a regular rentals now, right?
Yeah.
What they're looking into it, I know it's too short thing to do for the basically short term rentals right now, but if they're looking for a, if they're holding for a properties, what's the best way to go about it? Investment properties.
Oh yeah, investment properties. It's the main thing that most people don't do. Their bookkeeping. So first, start with their bookkeeping. So how much income, how much expense you have. Otherwise, you won't be able to know how much you even are losing or making. So one, you need a snapshot of that. If you haven't done your bookkeeping all year round, now's your kick in the butt to do it. If you need help, we got you. But then the second part is for realizing losses. Like the best part about real estate is that you receive rental income into your pocket. And then because of depreciation, you won't have to pay income taxes if it's high enough. So that's the big part why real estate is such a great investment because in stocks, you make money, you pay taxes. In real estate, you make money, you don't pay taxes. This is why the rich all buy real estate.
Yep.
So that's what the second part you really want to think about is how much depreciation do you have? But you don't know that unless you have accounting and books in order to do that. And then the third part here is that if you want to make any year-end investments into your property, that's totally fine. So, you got Airbnb, you want to put in a hot tub, you want to make some game rooms. Those investments are all great write-offs because one, it's going to help you make more money. Two, they're all deductions that you can take. So that's going to be great for like real estate investors on that portion. And then one fourth bonus one that I want to give to the listeners here is that if you have a home and you have a spare bedroom that you're not using, it's an office right now, think about house hacking. Yes, I know you got a little bit of stranger, but a lot of money that can be saved. So let's just say you buy $1 million home, any home in the Bay Area is $1 million, and say that can generate, you say 25% of that's used for house hacking, right? 1 to 4 rooms. Now you have $250,000 you can allocate. And let's say we got remove land a little bit, so we're down to about 150. Let's say you run a cost segregation on that, you could accelerate $30,000 against your income. And if you're at 50% tax bracket, I mean, most people in California are. I mean, if you're buying those homes, that's going to save you $15,000 in taxes using the home you already have. So house hacking is really important here if you want to think about it. But I always say, hey, think about what you can do. Can you do a garage conversion? Can you do an ADU in the back? Or hey, buy a new home, or rent out the next home. So a lot of things you can do with real estate.
I think that's very important. That's where I think a lot of people are missing out. The house hacking. House hacking is in a primary test. Let me repeat to rephrase the people. Listeners, we are live on a Bali 92.3. If you have any questions, myself, Realtor Nagaraj Annaiah, I'm talking to Tony from the CPA dude. If you have any questions, do give us a call. Our studio line numbers are 877 Bali 92. It's easy to remember, 877 Bali 92. Do give us a call if anything on related to tax or a real estate. So just rephrasing what you said, house hacking is basically you stay in one part of the house or rent out the second part of the house. It can be like if it's a 4 bed 2 bath, in that 1 bed 1 bath you can rent it out, and basically then you can do a cost segregation study and try to get a depreciation out of it, or like basically faster depreciation, right? That's what you do it. But for that one, the legal like that should be depends on both husband and wife are on two W2s, or one husband is on W2 and wife is on 1099. That's very important to know, right, Tony?
Oh yeah, yeah, big distinction. So the house hack short rental loophole, both can be on W-2. However, the other portion is like if you want to do the house hack and do real estate professional status, one person needs to be 1099 or full real estate investor, and the other one's W-2. So yeah, clear distinction you got to make there.
Yeah, that's very important to know. And I think if somebody had not thought about it, maybe it's a better time to start thinking. Maybe you can plan for 2026. Maybe 2025 is too late now because number of hours to pitch in.
Oh yeah, yeah. Real estate professional status we're talking about next year part, which is really kind of like, hey, if you didn't do much this year, I sound like a broken record every time I talk to anyone. I'm like, you need to do some tax planning. It's almost like your mom telling you, hey, you got to eat your vegetables, but you really need to take advantage of this.
And why do you think the tax consultant is very, very, who does the strategic planning is very, very important, Tony? Because a lot of people they just blindly go pay $500,000, get their taxes done, right? But they don't think about if they're paying for 100K on their taxes, how can they save? They don't even think about it. Why the planning is very, very important in this case.
Oh yeah, it's just very important. The big part is most people are just not educated. So like they don't teach you taxes or finances or anything like financial or tax literacy in school. And then, for folks that come over here, like my parents, they from China, they didn't know anything about this stuff. They just overpaid and the money to the government. But the big part is it's your wealth that you're losing. So you and I breathing right now, the government's taking money as we talk, and we're not even doing anything, right? So the big part is like, do you want your wealth cut down so much just from taxes? Or can you take that money and plan it? I always tell people, you do some tax planning, you save $10,000 and $10,000 for 30 years, you invest that 8%, S&P 500, that's $1.3 million that you get. $300,000 being tax savings, $1 million being that compound interest. So you want to do tax planning, like just because, hey, I'm W-2, I can't do it. I actually talked to a guy today. Oh yeah, dude, he worked at NVIDIA. And then he said, oh, I make $300,000. My accountant says, hey man, just pay. And I'm like, keep my language proper. I'm like, the heck, that's not the right way to think. I'm like, hey, have you talked about short-term rental loophole? Have you talked about fee simple donations? Have you talked about crypto miners? Have you talked about solar? What have you guys talked about? They talked about nothing. I'm like, you're losing a lot of money just because he was paying him $1,000 a year to do his taxes. And I was like, hey, we can use us for the prep. Like, no, don't use us for the prep. Keep your old guy for the prep. Use us for the strategy and planning. I'm told, hey, we can look at it. We save you money. Cool. If not, just refund your fees. We don't care. But the big part is like, do you not want extra money? Like if I gave you $10,000 tomorrow, you would probably be happy, right? You can take your family on vacation, buy the Christmas presents right now. It's Christmas holiday season. Donate it. I mean, or just invest it and make more money.
I think there are so many strategies. The one strategy always stands out for me is simple and clean is the real estate investments. You know, because lot of people doesn't even know how can they strategize if they have a couple of they always bought investment properties but they didn't even know they can do a cost segregation or they can even do a fast depreciation. Always people just went regular depreciation, but dude, it is not saving you much. 100% is the right now, the cost segregation is right now, right? Depreciations are 100% depreciation.
Oh
For
yeah, came
example,
back. Yeah.
yeah, if you got a 1 million property and the land is around 400k or maybe 500k is the land, 500k is the cost to build it, you can do a segregation study and see how much you can get maximize on that.
Exactly. Take more than you actually put down, right? Or equal to your down payment. Or the big thing is always arbitrage the difference.
Every 2 years, if you plan like this, every 2 years you can keep on adding one of the real estate properties to you. You do you by the time you look back and see in 10 years you would have five properties by yourself is built.
Oh yeah. Hey,
Right?
you're after retirement real fast. Yeah.
Yeah, so that's the way you need to think about. That is where we talk about the generational wealth. That is where we talk about how do you grow your assets, your property, real assets, real estate assets. That is where this event is happening on December 13th. December 13th is the day. It's just a 5 days to go. This is the day where you can where we basically talk about all this, give a general knowledge like where you can start investing on the real estate or seeing the other areas. Real estate is one of the avenue. We are talking about one of the avenues of real estate. There are other avenues based on your requirements, but we are telling you real estate can be one of the avenue and how you can basically start thinking about that. So to register for this, go to nagarajhomes.com. It's a free event, Tony. Like basically free tickets were sold out, but I got so many calls. I opened up some more free tickets for the listeners. You
Oh,
know,
okay. Yeah, yeah. I
it's
had one
just
guy reached out that was like, "Hey, you got a discount code for him?" Let me see if I got the plug for you. So anyone listening today will get a free ticket.
yeah, free ticket. It's just opened up the free ticket. There has been a tremendous response for this event, which is happening on December 13th. It's a next Saturday. Next Saturday, 4.5 hours. We'll be just blowing is just putting a seed so that real estate seed so that it starts growing. I'm not telling you'll become an expert on that, but it's just something to start thinking about. Just 4.5 hours instead of you watching TV, spending on your phones. Come over there, talk to the real people, real experts who can share how to grow your real estate portfolios. So Tony will be there, Elder will be there. We have planned for so much. We're going to talk about so many things on the how do you invest. If you can't buy in a real estate, you can invest in the go and invest in the companies. The companies can do it for you, right? That is what we are planning for. There's so many experts will be there. There's a lot of immigration issues also going on, Tony. Like that is where there's an immigration expert will be there, EB1A and EB5. Right now with there is called a direct investment with the EB5. With EB5, how you can go and buy in a real estate property and you can qualify to buy for EB5 visas. We do talk about that, and attorneys also will, as I said, attorneys will be there, lenders will be there. So do join for that. To register for that, go to nagarajhomes.com. Tony, are you excited for this event?
Oh, I'm pumped, man. I missed out last year. I was out of town, so this year I'm finally come back and come to the party.
Yeah. Do listeners do register for this event before the free tickets have been sold out again. So Tony, like one thing we talked about was the 2025 planning because it's just a few days left over. Correct. And I think in that one, the child investments also, right? Like how do you start using your child also for the investment purposes, like basically grow along with you? What are the things do you think we can do it?
Oh yeah, I'll just use myself as an example. My mom and dad put me to work when I was 11 years old. So, if you have a business, that's fine. If you have real estate, that's fine. We need one of those two to do it. It can be a side hustle. It doesn't have to be a full-time business. But the main part is just, hey, teach your children the value of a dollar. So, for me, I was at the restaurant hosting, like, hey, seating people down. If you got people in real estate, you have a rental property, take the kid out, hey, go, oh, well, there's not as much leaves. I'm originally from Minnesota. So raking leaves, clean the house, doing maintenance, that definitely counts as, proper, ordinary, necessary expenses for the kid to pay them. And then once you can start shifting income to the kids, that's great because a kid, you can pay them $15,750 without having to file any income taxes for them. So you can shift 15,750 to your kid. The kid can put 7,000 of that into a Roth IRA, and that money will grow tax free. When they take it out, it's all tax free. So that's usually literally how trust fund babies, generational wealth is built that way. So using income shifting is big. And once again, if you're say, hey, you're in California, you're near that 50% bracket, put 15 grand off, save $7,000 in taxes just like that.
One important question, Tony. Is it possible to legally pay zero federal tax in real estate, and how?
It's close, yeah. Uh-huh. Yeah. This federal, yes. State, no. So, yeah. So, well, state, unless you spend all your money. But yeah, federal, you can actually wipe away all your federal taxable income. Generally speaking, big way that we use it for our clients is always real estate. So that's because real estate allows you to get a write-off that you didn't even pay for. So let's just say I'll take a client, for example. He made $280,000 as W-2. They bought a short-term rental, $800,000. That one we were able to get. It was in the Midwest, so the land value is very low. We're gonna get $300,000 of write-offs. So he paid zero federal income tax. We had a $20,000 operating loss carry forward for next year. State, he still had to pay, but at least on federal, we actually wiped away that zero for him. So he's 280. I think a very common scenario for anyone in the Bay Area.
I think we were talking about before this show also. One of the client was owning a 350K in federal taxes, 350K on federal taxes for 2024, and you told me you were able to help them by the cost segregation study for because he had two investment properties, and the primary residence was he was renting out to one of his family. So using that, you were able to help him out on the cost segregation study for the primary residence and even on the investment properties. And we were able to reduce almost 280, almost for 350, 340K was reduced.
Yeah,
Right?
that's the power of real estate. Like when you had the Robert Kiyosaki Rich Dad Poor Dad book,
Uh-huh.
right? Why does he not pay taxes? Why does, a lot of these guys don't? It's because of the real estate. It's the hidden benefit. People sometimes they're like, oh, I just do stocks. It's 10%. Real estate's only 5%. But they're missing the beauty of that you're not paying income taxes on the rental income, and you have an appreciating asset that you can loan against to once again take money out to invest more into. Like Robert Kiyosaki's got $1 billion in debt. Debt's not taxable. Why do look at all the rich people? I encourage anyone, look at all rich people. How big is the debt on their balance sheet? It's large.
Yeah, that's very important. Like, see, always people say that they don't understand the value of the real estate. They always think about the stocks is the only way. I know the stocks is there to grow, but it's a virtual money. Whenever you sell, let's say you make a 1 million, you sell it, you make a 300K, almost 350K, you need to pay in a taxes. Depends on what portfolio they're in. They're just walking away with 600K, let's say. But in real estate, it is, if you, let's say you buy 1 million and 400K is a land value, 600K is where you can write it off.
Mm-hmm. Yeah,
Depends
it
again
takes
on the
so
cost
much.
segregation. And you can wait on to build that real estate to grow the value also. I was talking to one of these expert, Tony, he came in 1980s to this country. Every 2 years, he started buying up the hotels,
Mm.
hotels around. And now he has a close to 400 million worth of empire around.
Wow.
So that is where people miss out on the strategies in around. Always start something smaller. See how it grows in. Every 2 years, 3 years, starts adding some values. Maybe, as I said previously, it will have basically grown up, which without you even you knowing it. Recently, one of the client called me, Tony. Like he told me, I have a property in Fremont for one. I bought it 5 years back. Should I sell it? Because I've just stayed because their primary residence qualification, because he's moving to a second property and he's already staying in Dublin area, and this primary residence, this investment property is not helping him out. He was asking me, what would be your suggestion, to sell them or hold it?
Uh, Depends if they need the money, and they can do the 121 homeowners exclusion, so they can hit the first $500,000 capital gains tax free, and they can upgrade into something else. I'd probably do that. If they don't qualify for the 121 exclusion, I might 1031 exchange it, and then that way I can defer the taxes. But I'm always going to find a way to defer or eliminate the taxes before just taking the tax hit, though.
I just told them, dude, is it hurting for you, this property? If it's, does it, are you dependent on a financial from this property, investment property? Then why do you even think about it? I just told him, dude, just leave it. You're getting a rent, it's fine. If you're hitting with a thing, then go with the depreciation, reduce it. And maybe after, whenever you're ready, when you want your kids going to college, maybe you want to buy something near to the colleges, then you can do 1031. Why are you even scared about it?
Yeah. And you never have to be. There's so many options of real estate if you plan properly. That's the other cool thing that actually brought in my mind is that if you put in $200,000 a home, $1 million home, like almost any property in the Bay Area goes up like 50 grand. So like you have a 25% appreciation in the first year. There's no stock, not no stocks, but Nvidia, but there's very few stocks that's going to appreciate 25% in the first year, right? So that's another thing that it's just unhidden. There's many benefits to real estate. It's one, the appreciation. Two is the cash flow. Three is the depreciation, right? So there's many aspects you have to look at it.
Three things, can you repeat again, Tony?
Appreciation, cash flow, depreciation.
Yeah, appreciation, that's always there. Cash flow is not there, then you need to combine with a depreciation to make it better. This is very important thing to know. That is where the knowledge is very important. To build a knowledge on the real estate, that is where we are having an event. That event is called Real Estate Connect, happening on December 13th. December 13th, just few days to go about it. It's a free event. Lot of calls came in. I made it as a free again. Opened a few more seats before it's even sold out. Go to nagarajhomes.com to register for this event. nagarajhomes.com, because as Tony said, we can make free tax, basically pay zero federal tax in a real estate if you plan properly.
Yep, spot on.
Right, Tony?
Yep, exactly. Just plan. Yeah. The big thing is most people plan. What happens 9 times out of 10, I talk to people, they go to their accountant in April, they'll probably just be like, oh, okay, well, what can I do? I'm like, oh, it's too late. Like, you didn't do anything. Like, your accountant, when you think you hired a CPA, they're just filing your taxes, which is the job that they're agreed upon, but they're not doing tax planning, because you can't do tax planning in retrospect. Correct. You have to do tax planning in the current year.
Yeah, that is where the CPA dude will help you out. If somebody wants to reach out or book an appointment with the CPA dude, how to do it, Tony?
Oh yeah, just go to go.thecpadude.com, go.thecpadude.com, or reach out to me on Instagram, the CPA dude. Get you taken care of that. And if you want to call in also, 254 CPA dude, it's 254 CPA dude.
Or if they want to meet you in person, you will be available on December 13th.
I'll be there, ready to go. So I will have my CPA dude here, ready to go. So we're real. Well, it's really funny, man. I met someone at a dinner. It was like a big client dinner for one of our.
I think we have just 10 seconds.
Oh yeah. Oh, go ahead. Yeah.
So yeah, thank you so much, listeners. Sorry to interrupt, but I think we are running out of our time. If you want to register for this event, go to nagarajhomes.com. Is to build your generational wealth. Thank you so much, and have a wonderful day out there. Thank you.